Hey everyone, ASML reported its latest quarterly earnings results that sent the stock price down 8% as of this recording. So in this video, I'm going to review its latest quarterly results, what it could mean for ASML stock investors, and I'll update my recommendation for ASML stock. Now, coming into the quarter, I did have ASML stock rated as a buy, so you're going to want to tune in to see if I'm changing that recommendation, downgrading or upgrading the company following its earnings results. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, like I mentioned, ASML stock price is down 8% as of this recording. Following the company's earnings results, investors were disappointed in the results that came out. I'll share that with you in just a moment. Now, I highlighted that I did have ASML stock rated as a buy. I had rated and updated ASML stock last on March 15th. So on March 15th, I reiterated my buy recommendation for ASML stock. So if you followed that recommendation, you would be down on that investment. Let me share with you just how much. So today you're down 8%, unfortunately. But if you look at the last month, you would be down 4.27% on this investment. Now, I usually say when I make these recommendations, I highlight when I make a good one and I tell you that, you would have made a lot of money on this investment if you followed my recommendation. And so I'm staying true to being transparent and highlighting that if you followed this recommendation on ASML stock, you would be down. You would be down 4% in the last month and 8% today. So unfortunately, this one has not been a good performer, a good pick of mine of late. Now, let's see if I'm changing this recommendation. Total net sales for ASML came in at 5.3 billion euros. That was at the midpoint of the guidance, right in the middle of what management said they were going to do. They shipped 12 EUV systems and recognized 1.8 billion revenue from 11 systems this quarter. Now, they sell the highest end technology products that are very expensive. They generate billions in revenue from selling relatively few units because the price per unit is so large that they make so much money on each unit. The gross profit margin came in at 51%, which was above their guidance, primarily driven by the mix of the products that were purchased. The company sold more profitable products in the quarter, and so that helped drive the profit margin higher. So net income in the first quarter came in at 1.2 billion euros, representing 23.1% of net sales. Anytime a company generates more than 20% net profit margin, that's a good business, and 23.1% of net sales of net income, that means a 23.1% net profit margin for ASML. That's a good business. That's a good profit margin, especially for mostly a hardware business like ASML selling physical products. Software companies and companies with asset-light business models can generate higher profit margins. So depending on the business model, the profit margin tells you what kind of effectiveness that business is operating with. And for ASML and its category, a 23.1% net profit margin is very good. So they ended the first quarter with negative free cash flow, primarily driven down by lower down payments and higher inventory levels relative to last quarter. Now, they go on to explain that as customers have worked to return to profitability and strengthen cash position, we continue to provide some support for our customers. So let me break that down. As you might be aware, the semiconductor industry is just now coming out of a bottom. The boom in artificial intelligence is helping the semiconductor industry recover, although not every single semiconductor company is recovering strongly. For instance, Texas Instruments is not doing very well. They expect continued declines in sales and their growth is not looking very strong, whereas NVIDIA is absolutely booming. So it's a sort of mixed environment with the semiconductor industry. Some companies have already rebounded strongly, while others are poised and on the cusp of recovery, but not just yet. And the reason the semiconductor industry overall went into a downturn or went into an inventory glut as well as a downturn is because of the sudden shift in consumer behavior. Remember when we were spending more time at home because of the pandemic in 2020 and 2021 and early 2022? People were spending a lot more money on goods, and that benefited the semiconductor industry because people were buying things like TVs, computers, tablets, phones, etc., that all require semiconductors inside of them. And so that helped the industry overall. And then all of a sudden, consumer behavior shifted when economies reopened. Now, people were spending more money on travel, on restaurants, bars, theme parks, concerts, etc. And that left these companies with an inventory glut because you've kind of got to produce these products ahead of schedule, anticipating what demand would be 6, 12, 18 months later. And many of these companies built up inventory because they kept selling out of existing inventory. And so they built up inventory, and then there was that sudden shift with the economic reopening. And so they were left with that inventory glut. So 2023, early 2024, they're starting to recover from that inventory glut. And the industry will start to benefit in the second half of this year as consumers start to replace those electronics that they purchased in 2020 and 2021. They'll start to get older phones, tablets, computers. They'll need to be replaced and upgraded. And especially with the newer products being infused with artificial intelligence, that could infuse demand. So while these companies are recovering, ASML is a supplier to some of those production companies like Intel and Taiwan Semiconductor. So they're helping those companies by letting them have better terms when they purchase their EUV systems. They're saying, okay, we'll let you buy it with a lower down payment. We'll let you buy it and you don't have to pay us back. Instead of in 3 months, you could pay us back in 9 months, etc. Giving them deals to make it easier to upgrade, to purchase their new products. So ASML has been working with its customers, offering these better supports, and that hurt ASML in terms of their own free cash flow. And it's not a good sign for ASML. And because the industry is in this position, of course, ASML is impacted. And so it's not a great sign for ASML. This partly explains why the stock price is down following these results. If you have to give more incentives to your customers to purchase your products, that means organic demand for your products are not that great right now. So moving on, Q1 net system bookings came in at 3.6 billion euros, which made up of 656 million for EUV bookings and 2.9 billion for non-EUV bookings. But in the last 6 months, they've had orders of almost 13 billion, which is quite significant. And management is pointing out that order flow can be lumpy and it's not evenly distributed over the year. But as of the end of the first quarter, they have a backlog of $38 billion, 38 billion euros. So that's several quarters, perhaps several years, several quarters, I should say, of units that they can produce and deliver. So their revenue is going to be better as they move throughout the year. So for the forecast, they say Q2 net sales are going to be between 5.7 billion and 6.2 billion euros. And management highlights that the relatively low first half of the year compared to the expected strong second half is in line with the industry recovery from the downturn. So that recovery that I talked about earlier, the industry downturn, it's expected to rebound in the second half of the year, as is ASML's revenue. And they also expect gross margin to come in at, again, between 50 and 51%. So this gave us an idea of what's going on with ASML. The first quarter was not great, less than expected, and the company had to offer incentives to get their units out. And so you can understand why the stock price is down. Second half expects to be stronger. So to update my recommendation, ASML is now trading at a forward price to earnings of 29.03. And this is lower than the valuation I recommended the stock as a buy. And I didn't see anything new in this report that makes me less enthusiastic about ASML's long-term prospects. Sure, the recovery from that downturn is slower than expected. Still, the stock price is now 8% down to account for that slower than expected recovery. So all else being equal, I still think the stock is a buy. So I'm reiterating that buy recommendation here today, April 17th, following the company's earnings update. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon. TVs, computers, tablets, phones, etc. that all